So now that we've got that covered, welcome to the Public Newsroom. The Public Newsroom is a monthly digital workshop series where we debate and deconstruct local issues and highlight grassroots efforts to meet information needs. And the organization that runs that program is City Bureau. We're a nonprofit media lab that serves the South and West sides. So we encourage you all to stick with us till the end of the newsroom. We'll recap the event and outline a couple ways that you can stay involved and participate in the work that we're doing. We'll also follow up with an email that includes a recording of the event and some ways to keep the conversation going. So today we are so excited to be joined by Andrew Fan, the Chief Operating Officer and a data reporter at the Invisible Institute. Andrew also is a former City Bureau Fellowship is a fellowship alum. We also have Ron Milsap, the Vice President of Mission Banking and Community Reinvestment Act Officer at Providence Bank and Trust. And Megan Hryndza, the co-founder of Mighty, a comparison site that helps you find banks that are good for people and the planet according to public data. And we'll be discussing banks, how you can tell where your bank invests your money and what it means for us in our communities. So we'll kick things off with a Q&A with Megan and Ron, moderated by Andrew, and then we'll break into small groups to have a discussion. Any questions at this point? Okay, great. Looks like there's some really yummy stuff that you guys have eaten this week in the chat. I'll go ahead and kick it to Andrew and we can get started with the Q&A.
Great. Thanks so much, Ellie. I really appreciate it. I'm really excited to be here and to be talking to both Ron and Megan. Just to give a bit of background before we jump into the Q&A, this newsroom can have some reporting that our City Bureau team and also the reporters at BEZ, like Linda Letton and Eldon Lowry, worked on. And really where that came from was that before I was a reporter, I worked at a community development bank, actually with Ron. So I got to see firsthand, some of the ways that banking really is an intersection between a lot of actions that we take in our day-to-day, where we stay, where we keep our money, other choices we make like that. And also big systemic issues about which communities get investment, where money flows in the city, and what, sense of justice there can be in that process. The reporting we did ultimately found that in the city of Chicago, 70% of home lending ends up going to majority white people. Just 8% goes to majority black, 9% to black. There's a huge disparity.
Andrew, not to cut you off, it seems like your mic is maybe lowering. Sorry. Does anyone else feel that? Okay, yes.
Okay, is this better? Is this better? Okay, awesome. Great. Sorry about that.
Thank you. No worries.
No, anyway, but so I think that summed up that there's a huge, divide in who gets resources and who doesn't. Lenders put more money into Lincoln Park than they did to all Black communities combined. And there's a huge impact from that. So I think today what we're hoping to do is to talk about, what that means for the choices we can make as individuals, and also, what are the limits to those choices. So I'm really happy to have Ron and Megan here. And I was really hoping that maybe the two of them could start off with a really straightforward, but I think a question that's often really hard to answer, which is, when you put your money in a bank, what happens? Where does it go? And how does the bank actually make a profit from that?
I guess I can start with that one.
Thanks, Ron.
I kind of like that question because I think for most lay folks, we often really don't think about contextually what happens when you put your money in the bank. And often the thought is it just goes into a black hole. But that's just simply not true. Banks are businesses like any other business, and they have separate and different business models. Working for the time we spent working for Community Development Bank, Urban Partnership Bank, that model was really a commercial bank that was focused on primarily multifamily lending in low to moderate income areas. Your deposit dollars that came into the likes of an Urban Partnership Bank and a Shore Bank, particularly when we talk about what core deposits are. And core deposits are all those non-interest bearing deposits. Well, that drives the bank's internal cost structure. So that's essentially our cost of funds. The more local deposits that we have, i.e. core deposits, we directly take those dollars and leverage them into lending activity. So now, if our business model was focused where we're more of an investment bank, then those dollars may flow into those areas of investment. If we're more focused on consumer lending, then those dollars would flow there. But every bank that's federally chartered benefits by way of public deposits to drive its business model.
That's really helpful, Ron. Megan, did you want to add anything?
Sure. So I'll represent the non-banker perspective of how to answer this question of how banks make money. So I'm co-founder of Mighty Deposits, and Mighty exists really to answer this question of what is my money doing in the bank? And so it's a nuanced question, and I know we're going to dive more into that. But how we talk about what banks do with your money is that deposits are like the raw materials of a bank. They cannot make loans without deposits. So when you put your deposit in a bank, you're essentially given an opportunity to create a loan. And for the purpose of thinking about what a bank has to do with you and your money, if you get to make one loan in one neighborhood, where would you like to create that loan? And that's how you can think about the trajectory you're sending your money on when you make a deposit. Now, banks make money, you know, when we talk to people, they say, oh, banks are just trying to make so much money off me. They're trying to ding me. And so banks are paying for keeping your money safe and convenient, often offering technology that makes that convenience as best as it can be. And they're also paying you some interest though, because again, your money is the raw material for the bank. So they really, really want your deposits, even though they maybe don't always act like that. And then they end up making money because they charge people. When they use your money to create a loan for them, they make money on that. So our money enables banks to make money. And what Mighty looks to help people think about is, as you get everything you need in a bank, like safety and convenience and interest, what else can you get in a bank? As in, when you entrust your money to that bank, how can you have some input by the bank you choose on who they ultimately create money for? One thing we talk about at Mighty is, what's your bank's interest? Not just the interest rate, but the interest in existing in the first place. Who is it creating wealth for? And how do you find banks that create wealth for people in places that matter to you?
I really appreciate that. I think one thing that we've kind of heard and seen is that there are differences in the banks, you know, in terms of like where they lend and who they actually create wealth for. One thing that really came out of the investigation we did was that there's like a huge variation even among banks in Chicago. You know, Chase Bank stood out in our story because they lent 40 times as much money in white communities as in Black communities, which is obviously a shocking disparity, but there's also a huge amount of variation among other lenders as well. So I think one thing that I think both Ron and Megan, you mentioned is that, you know, it can matter which lender you put your money with. You know, it can actually help them make money. It can help, they might end up using your money to also, you know, to do their loan activities. So if you're trying to figure out, you know, which of these banks do I actually want to be involved with, if I decide that I want to make, you know, the mission or the interest of the bank something that I want to like be judging, how do I even start? Because honestly, like I know when I first got a bank account, like that was not something that was like in the air, something I could look for, or even like it's really hard to take one bank and another and say which of these is doing a better job. How would you even start to do that work?
I'll let Megan start with this.
I'll start with this one. So this is the experience that Mighty's looking to help people answer. So what Mighty's intention, and a little bit about how Mighty got here, we're really a grassroots effort. We've been building for years with small Mighty team, a ton of volunteers, many that have been giants in Chicago's community banking space. And we were a resident company at the University of Chicago. And so as we've been building, we've always taken very seriously our opportunity, but our responsibility of really educating people on the bank data that's out there. Now, the data is, there is no one silver bullet metric that is going to tell you this is an awesome bank or not. And Mighty's data is incomplete. The WBZ City Bureau reporting focused on Hryndza reporting. Mighty's platform right now is focused on something called the call report. And home lending is actually a subcomponent of the overall call report. And the call report just shows what is a bank doing with the money in the bank. So we really focus on, that's where we started our analysis. And so when we offer suggestions to people, we say, this is a place to get started to learn what we think is probably more than you've ever thought about before with your banking. So you can go to Mighty, and in follow-up to this session, we created a special page that's mightydeposits.com/WBEZ for people to navigate what I'm gonna say now on their own. But you can land on Mighty and you can say, if there's a certain zip code that matters to you, you can enter that and it will show you banks working in that zip code. If there are certain issues that are important to you, and everybody cares about some issues, we give you an option of what to start to look at, of what banks are reporting. And again, we're working within the constraints of data that are within the call report. So you can look at what banks are doing community financing first and foremost in Chicago. You can look at what banks are above average for lending to housing, for lending to small business. What banks have leadership that is predominantly African American? What banks have leadership that is predominantly Hispanic and informing the bank's decisions of the lending opportunities? So usually when people land on Mighty, they say, well, I don't really know what any of these means, but you enter a place and you enter something you care about and it gives you a short list of banks. Within that short list of banks, we hit on three main points for you. And we compare every single bank in the country by these 3 points. You can find every single bank in the country on Mighty. This is all public data. So we will show you how much money in that bank is being used for community loans versus something else. And we really don't focus on the something else. We just show you, is this a community bank or not? And you can see it's a community bank if it's above average in the community loans it's providing, or if it seems below its peers, or if you're thinking about two different banks. That's just something that it gives you some indication of which one is more community focused. You got to follow the money, right? If it's lending, if it's being lent to community, and again, that's home loans, business loans, large and small business, household consumption, that includes auto loans, construction loans to build new buildings. How much of the money is doing that? Then we also report, where is the money based? So banks base money in their branches. Some banks collect money just hyper-locally. Some banks collect money all across the country. So when you put your money in a bank, whether you do it through your phone, through an ATM, or through a bank branch, it might stay in your local community or it might leave and it might never come back. And you really had no way of knowing that. And Mighty's using data to help you understand if you want to compare a bank, two different banks on your block. Is one of them keeping a larger majority in your zip code, in your city, than the other? And you can compare that for every single bank. We have Providence Bank and Trust listed on our site, and they keep all of their money in Chicago and Northwest Indiana, and you can see that as evidenced through public data on Mighty. You can look up a bank like any of the most popular banks in the country, the biggest, most popular banks, and if you look at where their money's based, you see a heat map all over the US and a small amount in a lot of different places. So when you look at that big banks map versus a bank like Providence Bank and Trust, you can see Providence Bank and Trust the data indicates that it's a bank about financing Chicago and Northwest Indiana versus other banks that maybe have a national agenda. And you can infer things from that. And the last thing we show is just how do the banks compare in the projects, the types of projects that they're lending. So you can see, is this bank stand out for large business and construction? Does this bank stand out for housing and public works? And again, standing out means it's just above the industry average. So those are the first three pieces of data that we hit on to help you understand what a bank is doing. And what I can also say is if you go to the mightydeposits.com/WBEZ page, we invite you at the very beginning. It's almost, we created like a survey for you. You can hit see what my money's doing right now. And that's where we let you see if you put your money, if you enter 1 bank or 5 banks, no matter how many banks you have, you can see what your money is doing right now. So that at least gives you a baseline of what is my money doing right now. And as I look up new banks, do I see that these banks are doing something similar to what my money's doing now or something different? And what do I think about that?
That's really helpful. I appreciate that, Megan. And I'd love to kind of talk more about those metrics as we go along. Ron, I think just to kind of expand on this too, I mean, obviously there's like ways, there are tools like Mighty, there are different ways to kind of assess banks. There are also a couple federal designations that maybe will give you a sign of a bank, you know, has a different kind of mission. I know you're very familiar with these, Ron. So I was wondering if you could talk about CDFIs and what that means and, you know, how much you think that matters since you've had a lot of experience there.
I mean, I think approaching a question from that lay perspective, and much like you, I didn't have much of a knowledge around values-oriented banks and really understanding how that governance structure in terms of the diversity of the board, or if it's designated as a minority depository, or if it's designated as a community development financial institution. I didn't really have a layperson understanding for what those things meant. I remember being a freshman at Morehouse College and really thinking about the agency of Black community. And my first bank account, in college was to walk down from Morehouse campus and go to Capital City Bank, which I knew was a Black-owned bank, a bank that has since failed, but nonetheless at the time a Black-owned bank. And there are roughly 18 and 19 Black-owned banks left in the country. From a CDFI perspective, which Shore Bank was, an Urban Partnership Bank was, from being minority led, it really allowed me to kind of understand that industry, learn about that industry, and really understand how, you know, the very onset of how the bank is formed, its mission, its governance structure, how policy is set, decisions are made, really shape how that particular financial institution acts within community. And for those who may not have the understanding of what a community development financial institution is, these banks, and there's 100 plus CDFIs in the country, they all have a mandate that's driven in policy that 60% of all of their activities have to be generated towards supporting low and moderate income communities. So the vast majority of their service is covered through branches and ATMs that are located in low poverty-stricken areas. The very nature of their lending, the very nature of the customers that they serve are all centered around this policy mandate that's governed by the CDFI fund to make sure that their mission, year in, year out, continues to support the kind of work that helps essentially the communities, primarily Black and brown communities across the nation. It was also interesting in learning about that work that there are a number of community banks that may not be certified as CDFIs, but very much kind of operate within the same vein. I can remember working and working with Urban Partnership Bank and going through the struggles of what it's like for a minority bank to try to capitalize itself and support the local community. And I remember being a little bit conflicted when the bank ultimately and the board ultimately made the decision that they were going to sell to Providence Bank and Trust. And at this time, I knew very little about the bank, very little about its governance structure, its mission, and how it sought to accomplish that mission. But it's been a pleasant surprise to see how they act as agents within community. And to Megan's point, there's some good data points you could look at. You could look at loan deposit ratios. You could look at our CRA reports, which are public data, which give you information around how much we lend in our assessment area and who we're lending to. And then the bank has a very unique structure in that is one of the only banks that I know of in the country that actually takes 10% of all of its earnings. So at the end of the year, if the bank made $30 million, they're going to take 10% of that and invest it back in community. So it's really trying to find a bank through identifying kind of where they're located, how proximate they are to serving communities or causes that you're truly concerned about, how diverse is the representation of their staff and their board. And banks aren't necessarily, policy vehicles, but in the work of doing their banking, if they're truly serving community, they have the ability to uplift the communities in which they serve in.
I really appreciate that, Ron. And I think just to kind of sum up because I think Megan and Ron have laid up a bunch of really great points here, but just to kind of sum things up, I think one thing that stands out is that there's a lot of data about banks, but there's actually more data about banks than almost any other kind of companies in the United States. But it's also really hard to read. I've read a bank call report, and it looks like gibberish, honestly, if you're not used to it. So I think that there are tools out there that do exist, like Mighty and like others, that can help you kind of parse that information, and maybe kind of learn that the fact that the government does actually try to track whether banks are doing good lending or not, or lending in communities that don't get enough or not. And then the other thing I'd say to sum up is there's all this data you can use to try to narrow things down, but it can be a little bit hard to get your head around. There are these designations that really kind of show banks that meet certain basic criteria. So Ron mentioned community development financial institutions, CDFIs as they call them. And if a bank is a CDFI, that means that 60% of its lending is in lower income communities, which if you've seen how a bank normally operates is unusual. And also it poses risks, as Ron and I can both say firsthand. We both work for a CDFI that does not exist anymore. So that's another designation that can sometimes be a shorthand for a bank that works in those communities. The last one I'd mention is the MDI, Minority Depository Institution, and it's a bank that mainly serves communities of color. So this includes a lot of Black-owned banks, a lot of banks owned by Latinx people or Asian American people. These banks all fall into that category. So if you're looking for shorthands, that's another place to go. But anyway, I really appreciate what both of you said. And I wanted to kind of pivot us a little bit, maybe get back to that, something I just mentioned, which is Ron, you and I met at a bank called Urban Partnership that was based in Chatham on the South Side, and it's not there anymore. So I want to ask, we've kind of, I think you guys have both really clearly brought up that there are a lot of banks out there that actually do a different kind of work and operate differently, and that might align with people's values more than other banks. But also, it seems like in Chicago, at least, those banks have struggled. Megan, you mentioned Chicago is actually kind of the home to a real center of community development banks. One of the first ones, Shore Bank, was founded here. A whole movement kind of started in the city. But in a lot of ways, a lot of the banks that started that movement are also gone, and as are a lot of the city's Black-owned banks. So maybe Ron, I'll kick it back to you first, but I'd love to hear from both of you. How should we think about the fact that these banks that do this kind of lending are struggling? And have struggled so much that they couldn't keep existing?
There's no magic panacea in terms of answering this question, no silver bullet. I was always conflicted as being a person who lived within the community and was out there actively kind of marketing, soliciting, and trying to bring customers into the bank. And I found us sometimes being a bank of last resort, or a very transactional bank in terms of how we dealt with the community, how we serviced the community. There were those institutions that were acutely aware of who we were and why we exist, and that we picked up this legacy of Shore Bank to continue a mission. But banks are, once again, like every other business, in the sense that they have to innovate. They need to be able to attract investment capital. They need to be able to attract customers who will invest in what that bank is doing. And even Shore Bank, even at its height, even in its best years, would admit that they did not do the best job attracting local deposits. In fact, most of their marketing and their whole mission center was very national in scope, and they brought in depositors from all over the country, because in low and moderate income communities, there's usually that means there's low assets there, right? So it's for community banks, for minority banks, for CDFI banks to really effectively compete against large national and regional banks. There needs to be a greater awareness that those banks exist and that they exist for explicit purpose. And then there needs to be real direct action that we take as consumers to value what they exist for and actually invest in them. So if you were of my grandparents' generation and you could not find a credit union or a bank or savings and loan that would lend to you, Shore Bank was something that you were acutely aware of, because at that particular time, they were innovative in such that they were lending where nobody else was lending. They were caring about community in a way that no other banks were caring about community. So the community could rally around it and really understand that support. So I think this moment that we're in actually creates a moment for community banks, a moment for minority banks, a moment for banks that are truly about the mission of doing good within the community, and for it to raise the profile of how people view those banks, because those banks will continue to struggle if we value convenience over, the true mission of what that bank is doing within community, right? So if I'm just more so concerned about how convenient and accessible my bank is, well, the large banks, which hold trillions of dollars of our assets, by way of our investment in them, we enable them to have the best technology. We enable them to have the most customer-friendly touch and feel. Does that mean that community banks generally lack all of the tools that large national and regional banks have? No, but could they have more tools if they had more support? So I think in this moment, like, we should be asking these questions. And if we can identify banks that are within our community that in some ways are a lesser evil to what we've been doing, I'm not telling you to wholesale change the way you do all of your relationship banking. I think about it like maybe a tithe, maybe a wallet share. Maybe that I don't live in this community. I realize this community is severely disinvested. I'm gonna take 10% of my wallet and put it with this community bank, because it may just help that community bank have a better profit margin and be able to grow to a better level of scale to not only service that community, but to grow to a greater level of scale to be able to serve larger parts of the community beyond where they may be primarily located. And I'll let Megan take it from here.
Yeah, it's good, Ron. I'll add, so I think in terms of the history of Black banks, there's an excellent book called The Color of Money that people can read. And I'm gonna talk more though about, I mean, in regards to Shore Bank did close. It was written by, a great book was written, Bull by the Horns, by the FDIC chairman at the time, that said, Shore Bank was a bank that was too good to fail. It was small enough to close. It wasn't too big to fail. So I think sometimes the reason that Black banks and Black communities struggle is the same reason that the Black communities themselves are struggling. They're resource poor and there are system level inequities. And Ron spoke to some of the system level inequities that banks are facing in terms of political support, customer support, perception. When Shore Bank was open in 25 years, it did rehab 55,000 units in multifamily housing. And that turned the neighborhood around. It made it a strong middle-class neighborhood. Shore Bank's intention was to never become Bank of America. It was to make loans that were hard to do. It wasn't going to be the most efficient bank, but it was going to be an effective bank. And so the role for banks like that within our economy today, and the support for banks like that to weather inevitable crises, it's an important question. Mighty, in being forward-looking, likes to think about, well, how do we, if there are important banks that are doing these, perhaps not the most efficient lending, but really important, effective lending in communities that are otherwise being excluded, as the WBEZ and City Bureau reporting exposed, how do we rally around these banks? So, you know, I think there's also a few ways to rally around these banks is to consider these banks real viable banks. They're as safe as the biggest banks in the country. Nobody's ever lost money in an FDIC insured bank. They often will pay you better interest than the biggest banks in the country. And technology is becoming, I mean, a lot of people bank with Venmo, and Venmo works with every bank. And so people are using technology that is completely independent of the bank, and they're just plugging in the routing number. And so I would challenge what Ron said, and this is why we like working together, is Mighty suggests that people do transform how they bank, just transform their perception and realize that you're not actually giving anything up if you bank with a bank that has a different website. It's just more of it's something different. But I will say, you know, a couple of months ago, talking about the significance of Black banks is different than talking about the significance of Black banks now. The #1 search on Mighty right now is for what banks are supporting Black equity. And this has been in response to the protests. And people are really thinking and saying, I just never thought about the inequities that were being perpetuated by the financial system among communities of color, especially Black communities. And it's Mighty is seeing that it's actually that people being, I'm not okay with that. And now that I know that, changing a bank doesn't seem so hard. It actually seems like now is the time to do it. And so I'm working toward a future in which, when there are next inevitable hard times, and we're living through hard times right now, that a discussion politically and financially in the country, when we're talking about the banks that we need to help small business make it, communities make it, keep resilient, we're not just going to be talking about the banks with the deepest pockets. We're going to be talking about the banks that, according to data, are effective at lending as an industry in an inclusive way. And no one bank is going to do all of the lending that's required in this complex economy that we live in. No bank is going to do it all perfectly. So we need a network of banks, and they need to be both big and small. And some of them absolutely need to be Black focused.
Thanks, Megan. I think since we're kind of the end of our section, and actually I think there's some really great questions coming in on the chat, I'm actually going to grab one of those and kind of maybe use that as our jump off point, so we can start to take more questions from the audience. So Andy Chen in the chat just said, what policies should we push our elected officials to enact to level the playing field within financial services? Large banks almost seem like monopolies and too big to fail. And it seems like my personal choice of banking only goes so far. So I'd love to hear from either Ron or Megan on this. I'll chime in briefly and say that I think that's a really great question and something that I've struggled with thinking about responses to this. I think that obviously there's room for personal choice, and our personal choices and political choices are not, completely distinct. But I agree. Like, I think it's clear that, policy level mechanisms are really important. Two things I would say quickly that I have either thought about in my time at banking or reporting is that, there's the Community Reinvestment Act. It's a law that requires banks to lend in lower income communities and requires them to, in some ways, like try to redress some of the things they've done in the past. And so I think that is one mechanism that, could be a lot stronger. We've heard from advocates, it could be strengthened to change the way that banks across the board lend. The other thing I'll say is that Nicole Hannah-Jones, the New York Times writer, published an essay a couple of weeks ago, and she looked at this wealth gap and she said, ultimately, the policy answer she thinks, and others have echoed, is something along the lines of reparations. If we're talking about a wealth gap this large, we need to be thinking about what policy responses are equally large and equally ambitious in response. So that's me personally. I'd love to hear, if Ron or Megan wants to jump in, but I think it's a great question and something that we really need to wrestle when we think about both these personal choices we can make and also, the limits that do exist on those actions.
I would like, Andrew, I was sitting here and my first inclination was reparations, right? So let's make no bones about the centuries of disinvestment that has happened to urban communities and that persists today. And the structure of them are such that in banking as an industry, banking, as you go back to the history of banking, it really has even banks, right? We're beholden to our FDIC and OCC, which provide us insurance coverage. The very nature of the bank is to be conservative, to lend conservatively, to lend to folks who have credit, lend to folks who have assets. You have to exist outside of the space of conventional banking to really get creative. So CDFI loan funds are a lot more creative in how they invest in small business and they invest in affordable housing. A lot different than a conventional bank, because a conventional bank has a regulator that's going to make sure that all of their lending is safe and sound. And a depositor is going to want to make sure that their lending is safe and sound so they don't lose their deposit or their investment that they have in that bank. So if the banking industry, we could be as innovative as we want around product. We could be as innovative as we want around attracting different segments of the community to be able to support them. CRA in and of itself will not correct the wrongs that have been done. A lot of banks pass the CRA exam. Chase successfully passes their CRA exam. I'm not going to necessarily beat up on any bank in that regard, because I think that that test is a test and it tests how you do different things, but there's no trickle down approach to CRA. You can do it through tax credits. You can do it through a lot of levers that are not going to truly create equity for a community. So when you think about the divestment that divestment that has happened in Black and brown communities, how else do you address it without a large, and I know reparations make people quite uncomfortable, but so much harm has been done, particularly to Black communities, that you just can't deny that harm, and that harm is still persistent today. So when I think about that, to me, that's the clear-cut way to do it. And I think the only difference is that the country has not demonstrated, Congress has not demonstrated the real will to do it. The capacity to do it is there. And I think it's evidenced by what we see and the levers that have been put in to support small business through the PPP loan program, for example. That program took essentially every risk away from conventional banks. You know, as an institution, Providence lent out over $113 million in PPP loans. And we did that across the city of Chicago and in our core markets that we serve. We did not have the same underwriting convention that we would for a traditional loan. We were able to make those loans pretty much as long as you could produce the paperwork and justify that you were in business before COVID struck and that you were a legitimate business enterprise, right? There is still some fraud in the program, of course, but the government decided to put, you know, $1 trillion behind this program overnight. And they supported it for all businesses, but as much as the program may bear out some successes, it also, once again, shows great disparity. Because what did banks do? You had to have a lending relationship or a deposit relationship or some type of established relationship to the bank. And most banks in that first round, it was a credit relationship. It was based on your ability to have access to capital. So if you had no access to capital before, you couldn't even apply for the PPP loan through most of the banks. So if our government has the will to put together $1 trillion program overnight that can support small business, why can't they put together similar programs to support Black community? And that's a question I think that when we're talking to our elected officials, we all have to exist being a little bit more uncomfortable in this current time. And we got to just speak truth to power. This country harmed Black people. This country needs to atone for it. Reparations is the only way.
I appreciate that, Ron. And I really appreciate that. I wonder, Megan, if to kind of give you a bit of a different version of this question. You know, a lot of what Mighty is doing is asking people, you know, insisting that the choice of bank really matters, and that, you know, that's an important decision we can make about that has like ethical and, you know, social implications, right? And I think that makes a lot of sense. But I'm curious, you know, do you see that as part of a broader set of choices you're hoping people will make about their money and about how they engage with financial institutions, or, you know, how do you you know, see it amid these other choices we're kind of talking about right now?
Yeah. Well, I think we just look at, I think the United States per capita gives more per capita than any other country in the world in terms of donations. People care deeply. People want to help their neighbor. There's also, we're great consumers in this country. We've been taught to be. And so a lot of times you can buy the t-shirt or buy the food that can help change your community, change the world. You can buy a car that does that. And then there's a lot of talk about investing. You know, what are people investing in terms of stocks, their retirement? And so we just see that banking, with $14 trillion in the banking system, that the majority of Americans, and really important, we're talking also about companies and foundations and universities and hospitals that are all contributing to this system. And then understandably, collectively, all of these entities feel overwhelmed when it comes to changing the banking system. And so in some ways you have to start with what you can do. And so while Mighty is mobilizing individual action, we're really encouraged at seeing things like what Netflix has recently done and putting $100 million of its cash, I think it was about 2% of its cash, into a Black credit union. But they then were becoming a reference point for other businesses that were saying, oh, this is actually an interesting way for our business to do the banking we need, get some interest, and it works out well. It's actually win-win. And so I think the opportunity for just acknowledging individual choice, for placing that deposit, and the catalytic effect that can have, especially within business, especially among universities, especially among foundations, that can get attention. So I was just actually looking up a stat on the site. There's there's 0.7% of all deposits in the country are in Hispanic-led banks. And just, what's the fraction here? Just 4% of that fraction is what's in Black-led banks. There is not a lot of money behind professionals of different audiences that are informing banking solutions for a larger banking system. So if you were to even double the amount of deposits that are in Black banks right now, that are in CDFI banks, there's about 0.4% of total deposits in the country are in CDFI banks. That would be a lot of money newly enabled for loan creations within communities. And I think that would get the attention of bigger banks, of policymakers, and I think these discussions can become more palpable and urgent. And I'll also say, and then you always got to get the young people, because companies are always afraid of what the next generation is going to do. So, and where are they going to go? And so I think, you know, by demonstrating that people are starting to think about this in addition to, you know, what makes a good bank, you know, interest rate, mobile app, and what are you doing with my money, is a provocative question that will have a lot of banks sitting forward in their seats and seeing what happens.
Thanks, Megan. That's really great. And I think, thank you also for kind of, I think that was a question I saw in the chat was really, okay, like when people like Netflix, things like groups like Netflix are making these sorts of moves, like what's the impact? And I think what I'm hearing is from you is that there's like real impacts in just the amount of money that these organizations have, and that funding, that those resources matter, and having those deposits matter, but also it changes like the conversation we're having around these banks, which is really helpful.
Yeah, and maybe just like to quantify that impact of the Netflix deposit, let's just assume it was in a big bank. 40% of that money would have 40% of that $100 million would have been created in community financing. But with Hope Credit Union or any focused banking institution, it's more like 80. So Netflix, with kind of an apples to apples decision, but just considering impact, doubled the amount of community financing happening in the community. And a lot of times these communities are working with smaller loans than the traditional banking industry. So now you're talking about, you know, multiple loans, real people's lives, maybe sometimes the first member of the family to be able to launch a business. And that's community changing stuff.
That's great. Thanks, Megan. I think we're going to wrap this section up. The last thing I want to say was there's some really great comments in the chat about public banking, which I think is a really interesting option. I know some officials in Chicago have been talking about it. Definitely recommend people check it out. I personally actually am also in that boat of people who needs to read more about it. So I just want to recommend people check out that thread. I think there's a lot of interesting, you know, perspectives in the ways that can kind of potentially be another solution to the problems we've been talking about. But Ellie, I think that's the end of our section. I'll hand it back to you.
Great, thank you, Andrew. Let's take a moment to just appreciate Ron, Megan, and Andrew's expertise on this topic. Thank you all so much for participating in this Q&A and for really, you know, demystifying a topic that I think feels pretty inaccessible to a lot of us. So now we'll have a chance to actually break up into groups and talk with one another about this topic and about, you know, the ideas that we've sort of presented here. So India will break us up into groups of about 3 folks in a minute. I want to direct everyone back to the agenda on the second to last page, so page 5. Is a list of questions that I'll ask you all to sort of discuss in small groups. And before we do that, I just want to shout out really quickly. I see that we have Paula Friedrich, Linda Lutton, Erin Allen on the line as well. They're all wonderful reporters who sort of contributed to the reporting on this topic that was the point of departure for this public newsroom. So if you get them in your group, you can ask them about that. Thank you all for sticking with us and participating in that little breakout group. we're just about at the last part of this newsroom, so I just wanted to open it up for maybe 10 minutes and ask if anyone wants to share something that they talked about in their small group. You can just go ahead and unmute yourself.
Hi, I guess I'll say something. We really enjoyed talking about the resources that Mighty provided and thought it was a really cool tool. So we really appreciated this talk generally. Thank you for being here, Megan.
Thank you.
Thank you so much.
Bettina has a question in the chat here. Bettina, did you want to unmute yourself and just go ahead and ask that to the broader group?
Yeah, sure. Me, Samantha, and Katie had a lovely conversation, and one of the things that came up was credit cards and like whether or not there's any way to move our credit cards to a place that's better, because it seems like there's just a few big credit card companies.
It's a great question. Does anyone know? I know that we have a lot of folks with expertise participating as attendees, so anyone feel free to answer that if you have a sense of it.
I was going to say, I was looking around to see if he was going to chime in. I will say credit cards are absolutely important to a lot of community banks. It's a meaningful line of business. Like when they have credit cards, it helps support their business. A lot of times those credit cards are ultimately operating on the rails of Visa and MasterCard. I don't think there's really any working around that, but there's banks like, and I'm just gonna think about one bank that has talked to me a lot about their credit cards. It's Beneficial State Bank on the West Coast, but they have credit cards where when you swipe, some of it benefits the lending they're doing in Oakland, primarily among Black and Brown communities. And some of that money also goes to Sierra Club or a few other nonprofits they've partnered with. And then some of that money goes to Visa and MasterCard. So again, I don't think there's a way to work around the Visa and MasterCard, but the message is that you can absolutely think about, can I find a credit card where some of it is going to banks that advance the community mission, perhaps some nonprofit community partners, and Mighty's absolutely interested. I mean, Mighty's interested in as inquiries come up, how do we help people kind of find that information? And so we're interested in getting some of these credit cards listed, but we currently don't.
Thanks, that's really helpful.
Check out Green America. I think though they have some listing on their site about some banks offering credit cards.
Great, thank you. Anyone else, any impressions, anything you got out of talking with one another in the small groups? I am particularly curious about the question of how we can make this information more widely available. So if anyone has thoughts on that, now's the time to chime in.
This is so tough with such a large group. I'm used to like my work meetings where it's very obvious to pass things off to people. But I was in a group with Olivia and Kim, and I was kind of talking because I come from a marketing and advertising background, and I was talking about the behaviors of like banking with the bank that your parents banked with and how hard it is to get out of that system. And we were kind of talking as a group about, like offering the need to offer personal finance within like the public school system. And then I also brought up State Farm's next door like community meetup spot, and how I just said like it's in the Lakeview, Lincoln Park area, and it's like the free content and education that they offer there is not really doing as much good on the north side. So we were just kind of talking about like Kim's organization is doing a huge renovation to kind of offer that on the south side. So that was kind of one thing that we were talking about in terms of like spreading the knowledge of all of this and banking you know, banking with intention and understanding your choices.
Thank you for sharing that. So,
if I could chime in, and I know I've talked a lot on this
No,
call,
you're
but
good.
Kelly's comments made me think about Money Think, which is really good at getting into high schools to talk about all things financial. So that could be an outlet if they would be interested in this content. And I just need to say, you know, having built this at the University of Chicago, I was amazed at the number of, you know, this is a school that you have to jump through a lot of hoops to get in, right? And you got to know your stuff about economics. Everyone's studying economics. And there is a lack of content and just awareness about how to talk about community banks, how to talk about CDFIs. And so I think there is for a discussion like this, just to approach Chicago universities and say, is this part of your finance curriculum? You know, is this maybe worth one day, you know, your young, ambitious students just being exposed to this other side of banking or this other consideration is something that we're interested in, you know, with Mighty. And again, we saw it firsthand at the University of Chicago.
Thank you, Megan. I just want to highlight a question from the chat that I think is a good one. Louisa here says, our group also had questions. We were wondering about where to find financial advisors that have the same goals of community development and investments. If anyone has thoughts on that, please feel free to share here.
This is Kim Jones. I think I just made a quick response in there. During the course of my work, I actually work with several socially responsible investment organizations and companies, and there are several around the country. One that, you know, we have had a great relationship with is Natural Investments, and they have investors all over the country. There's actually an annual conference. It used to be called SRI in the Rockies, but now it's just SRI, and it's actually a conference where many of the you know, socially responsible and mission-related investors actually come together. So I would say kind of, you know, look up, you know, those kind of companies. But, you know, also there's, you know, there is a push for folks, you know, what we call sort of the regular investors to start adding mission-related investments to their portfolios because their clients are now starting to ask for that. And so we're also trying to help kind of push the industry in that direction. You know, to start bringing some of those products into, you know, their product mix. And typically, you know, with SRI investors, it's usually through the cash portion of the portfolio where they can, you know, invest in CDFIs, MDIs, and loan funds. But there are definitely, you know, those types of investors out there, investing firms out there. So.
Thank you, Kim. It is so lovely to get an answer from someone in the attendance who has expertise on this topic.
Well, full disclosure, I actually used to work with Ron and Andrew, and I'm a Shore Bank alum.
Awesome. Thank you so much for coming. I want to highlight another great comment here from Olivia, who says, protests at Chase banks in Chicago have done a lot to spread info about problems. I wonder if actions like that could be places to share information about alternatives, and if we could increase capacity around that by connecting different movements that are pointing to the harm by major banks. That's a great point, Olivia. I don't know if you want to say anything else about that or if anyone wants to respond, but I wanted to elevate that as a way of thinking creatively about sharing this kind of information.
Thank you. Yeah, I think one thing I would add to that is I know that a few years ago, maybe like 5 to 8 years ago, there were some protests of Chase banks in Chicago that connected climate activists and housing activists, like talking about, you know, I think like with less knowledge about, with different knowledge about kind of disparities in loans and foreclosures than we're kind of getting about loans from the investigation that you all just did. But just to say there's precedent for this, and there are a lot of different kind of directions you could come to this from. And I also know that some of the climate groups in Chicago that are working around chase divestment have been talking about doing something like, trying to create guides for people to change their banks or things like that. So there's definitely interest in those areas too.
Totally. All right, well,
I'm going to volunteer here. If anybody knows anybody who wants help creating a guide, write Megan at mightydeposits.com and we will help anybody write that guide. We've got a lot of data, but we're just a small team, so we can't get out across Chicago, but this is where we would love to work with community organizers.
Thank you for that offer, Megan. That is actually an excellent transition to my next ask for you all, which is if you want to continue this conversation, if you'd like to continue to be in touch with the folks who have showed up to this call, who from what I can tell from the breakout group and from the discussion we're having now are really thoughtful and knowledgeable about this topic, you can go ahead and drop your contact information in the chat, and that way you can sort of, or sorry, not in the chat, in the agenda under the stay in touch portion. And that way, you're opening yourself up to conversations, to collaboration with other folks who made the time to be here today. And yeah, just to close out, I know we're sort of running up on time here. I just wanted to say thanks again to everyone who joined, and an extra special big thanks to Megan, Ron, and Andrew. Your expertise is so deeply appreciated. Like I said earlier, really helpful to have this sort of stated in plain and accessible language. I also want to encourage you all to check out the takeaways section of the agenda. Megan, in particular, worked on this really great landing page that is just for attendees of this workshop. So feel free to check that out if you're curious about learning more. And before I go, I just want to say that, these kinds of discussions are really essential to the work that City Bureau does, because they help us come together and figure out what our values are as an organization and as a community, and how we can put those values into action. So I want to remind you all that the process doesn't work if it stops here. We want to stay in touch. So we'll be following up with an email around how to stay involved in the conversation, because everything that we do is informed by what we hear from people like you all. So we want to encourage you to do two things. One is to fill out the survey that's linked in the agenda. It should only take about 3 minutes, and that is a really excellent way that we get feedback from you all directly for this program. And the second one is a little bit of a bigger ask, but it still feels really important, which would be if you enjoy this event, if you like the conversation, if you like the idea of democratizing information like this, you can sign up to become a recurring donor to City Bureau so that we can fund these events and other great programs like Documenters and our fellowship. We really try to be accountable to the people and communities that we serve, and a really great way to do that is to have you all sustain our mission for the years to come. So we know the times are tough, but if it's literally just $1 a month, you're helping us build that base, and it's helping us make journalism more equitable, and it's helping us reimagine what local media looks like. So thank you all for coming. Thanks to our presenters again. Thanks to everyone who participated, chatted, exchanged ideas. This is really what makes our work exciting. And I hope that we stay in dialogue and that you all have a beautiful Thursday night.